Hey everyone, today is February 10th, Wednesday. I'm going to do a quick trade update for my news forex trading. Um, Basically, the strategy is it's very simple. First thing you do is you mark down the time that there's a major news release going to happen. So you can just simply go to a free website like forexfactory.com or use Forex Live. Pretty much go click on the economic release calendar. That you can see whatever major news is. Now remember, there's other non major news that you can also do, but for me personally, I only want to do the red ones, so the major news ones, and I only do major currencies. So although you can see I still have, you know, other currencies here, but I tend to just focus on major news from major countries. So today we have a cable manufacturing production news release month to month. Now, important thing about this strategy is that it doesn't matter what uh, news it is. We only care about a few things. First of all, it's a red major news, and then second of all is the outcome. Now, when I say outcome is again, we are not economists. We don't really care where the uh, where the British pound is going in the future. Right? It is a very short-term speculating strategy. So what you want to see is a surprise, because a surprise will drive momentum, which will give you a lot of price action, and that's where the moment you have an opportunity to make some money from the forex market. So what I tend to do is I'm looking at the forecast, that is forecast from an analyst, and if the actual number is around 15 or 20 or even more percent of differences. So for example, you see forecast is 0%, right? So if you have either zero point 0.1 or negative 0.1, that will be almost 10% differences. If you have zero point 0.2 or negative zero point 0.2, you have 20% differences. So in today's case, we have 20% differences, which is actually great because the larger the differences, the bigger the surprise that all the crowd will react to the market, and that's what we want. So again, it's very important to understand that we're not predicting the news and we are not trading the news result. We don't really care what happened in the British pound. We don't really care the actual manufacturing production result. What we just want is this momentum from the differences. So the bigger the differences, the larger the momentum you're gonna have. So what I'm trying to basically do is half hour before the news release or 15 minutes before the news release, I'll pull up three major crosses that in accordance with the news release. So today we have a cable news. So what I do is I put on cable. We have a British pound news release, so I use cable, I use pound yen, and I use euro pound. Now you can use pound Aussie, you can use pound New Zealand or pound CAD, whatever you like. It's just my personal preferences. I'm just trying to show you a very simple naked trade that you can actually make money from news trading. So when I pull up this three chart, right now it's 12 o'clock, right? 12 Eastern Standard Time. By the way, every time I mention the time, it's always going to be Eastern Standard Time because that's where I am, and that's just a better understanding for most traders. So it was 4:30 news, so let's drag it back to that time. So as you can see, 4:30. This is the news release candle. So what I usually do is I have a 1 minute chart open. I also have a 5 minute chart open. So again, let's go back, and that's a 4:31. And we do the same thing for Pangyang. Let's go back to 4:30, and that this one is a news release candle, and a 5 minute. This one is a news release candle. Same as Europong. Let's go back and let's see. This one, sorry, this one, this huge, we call it kangaroo tail from my mentor Walter Peters, or you can call it, I forgot the actual name from Steve Nissen's candlestick, but as you can see, it's a huge buying power trying to push up the price but fail and go down, right? It's a great selling signal, but uh, hold on. Okay, that's 4:30. Okay, so what I'm always do is I have the three chart open. Now the reason is that I don't predict. Again, I don't care what the news result is. I just want to see what is the price reaction after the news. So again, we don't trade the news. A lot of people try to do this by trying to trade the news by you know putting a pending order prior to the news release. So maybe they put something here and they put something here and they say, hey, if it's a good news and it goes up, I'm gonna get feel and I'm gonna get money. And if it's bad news, I'm gonna get feel, I'm gonna get money. Trust me, I tried that strategy before. The problem is that when the news released, it's just too fast. So you will not get filled at the correct price you want. So if you use a limited order, you're not gonna get filled, right? It's gonna shoot up and you're not gonna get filled. In fact, you're gonna get filled if you have a long order here, you're gonna get shoots up and then when it comes down, it's gonna fill you and it's gonna stop you right away. That's the scenario. The other scenario is if you use a stop order entry, it's gonna shoot up, fill you in a very bad price. If you want, let's say 1.4480, if that was the price you want to get filled, let's say here, right? You want to get filled here. It's actually probably when the news release is sometimes you have like 15 to 20 pips differences. So you're gonna feel maybe at 144.90, things like that. Now in this case, this is a news candle. You can tell that it's open at 144.65, 66, and then goes up to a little bit 1.4470, and then it goes all the way down to 1.4440, right? So it's just basically just a very risky strategy if you try to do this two pending order strategy. It's like one of the option strategy. I forgot the name, straddle or something that you can do this. But in terms of forex, especially for people who are new to this, it's a very completely different market. The liquidity and the speed is just beyond any other instrument. I trade stocks, I trade options and futures, and I still think forex, especially the spot forex market, has the huge, like the biggest volatility, especially when major news is about to release. So, rule number one in terms of trading is always try to protect yourself. So you don't want to, you know, do something that you really have no control. So I don't do anything before the news. Right? When I say I trade news strategy, it's always after the news. So before the news release, I just prepare. So a few simple way you can make money out of news trading. First thing I do is 1 minute chart. This is a news candle. So after this, you can tell it's a huge kangaroo tail. So a lot of people do, or it's just a simple strategy. If you want, is that if you have this kind of pattern, right? Today is different because you don't have this kind of very clear pattern every day. But if you have this kind of very clear candlestick signal, you could just simply go long at the closing, right? So when news close, now what does this tell you? Because you always have to look at what individual candlestick is telling you. What's the story behind it? The story behind it is that people trying to push the price down, but they fail. So they try to push down to, again, the open is at 1.4465. They try to push down to 1.4440, right? 25 pips down. But it failed, so the price goes up and actually closed higher at 1.4470. And that tells you a story that the seller is losing a battle. So just based on that simple logic, you can just go long right here. Now, in terms of news trading, if this is a 4-hour chart, then maybe I will put a stop loss at a candle low or maybe even lower at a swing low. But in terms of news trading or any sort of 1 minute or 5 minute, this kind of short-term trading, it works better to have a set stop loss because it will give you a favor in terms of risk and reward ratio. So if you actually long here at one point, okay, here's the price at 1.4471, and you put your stop loss at the low of this candlestick, which is 1.4440, you actually risk 31 pips. So in order for you to get at least 1-to-1 risk reward ratio, the price has to go up to 1.45, you know, 01. Now, it just doesn't work that way for me personally in terms of news trading. I don't like to do it. In terms of this, especially this 1 minute chart, I often just like to use 5 pips or 10 pips as a flat stop loss point. Um, because the thing is just goes very fast and sometimes it's not even gonna reach the level that I want it to go and will come down. So I rather work on this risk reward ratio. Again, the point is to have a correct risk reward ratio because you never want to, again, I'm saying this personally, you never want to do a trade that you don't even have 1-to-1 risk reward ratio. Now, we can talk more about this in the following videos, but basically just think very clearly, just like you go to casino. If you play a game that you every $1 you lose, you're only gonna get 70 cents back. That's just a very it's just not a good outcome for me because that means I always have to win more than I lose. And yes, some strategy you can win more than you lose, but uh, the stress or the pressure that to know that you have to win more is just not working for me psychologically because trading is not being right. Trading is all about are you able to make a profit out of it. So you can be wrong many times, but if your winner is way much larger than your loser, then you have a sense of buffer and knowing that you don't have to be right every time. In fact, you can be wrong and still come out as a winner. So right here, if you do a simple candlestick strategy, you just long here at the closing, which is 1.4471, and you lose 10 pip. So when next candlestick, it goes up to 1.4496. That is 25 pips. That is almost already 1 to 2, right? So you can actually just take 1 to 2, or you can just at least set your stop loss to break even because you already have 1 to 2 or even 1 to 1. I tend to set it to break even at 1 to 1. So when it goes up, maybe people like myself personally don't have much patience. I would just grab the profit. And the thing is that you have to think, why do we do trade as a trader? For me, there's two major reasons. First is that I want to make money, of course. Everybody wants to make money. But the most important reason for me is the freedom of time. If I have to trade 8 hours a day in front of my computer screen, then I am essentially doing a job. It's just exactly like a 9 to 5 job. And that's not the ideal scenario for me to trade because I trade in order to have time in life to do other things that I truly love. And that is why I love this kind of strategy. Because you say, oh yeah, I only make 20 pips today. Let's just say you use a standard lot, you make 200 bucks today. Just look at how much time you have spent. You wake up maybe at 4 o'clock. You don't do nothing. You prepare. At 4:30, you see these great candlesticks. You enter with 10 pip stop loss. you profit at 20 pips, and you finish the day. You're done. You just make $200 in 2 minutes. And does making $200 in 2 minutes gonna make you, become a millionaire next year or next month? Probably not. However, the point is that for a person who has a regular, 9 to 5 jobs, who is just a student, let's say, you make minimum wage of, here in Canada, I think it's around $12, and it takes 8 hours to make not even $100. No, pre-tax. That means after tax you make less, and you're able to make that kind of money in 2 minutes. And that is, and you can still go work your part-time job. You can still do other things, but it's just a great way to increase your income with the leverage of time. Because if I want to do something, I don't want it. I want to do something to make money other than job. I do not want it to be another job because it's just another job to sucking up your time, and you're never gonna be able to enjoy life. So again, this kind of strategy, this kind of candlestick pattern, it does not appear anytime, right? So it's actually not my priority strategy that I use. I'm just giving you an example. So the things I use is basically very simple support and resistance. I don't go to any longer time frame to do anything. Again, everything I see is whatever it is in front of my eyes. So in this kind of case, I usually wait after 4:30 candle, 4:30 news. I let it run, and as you can see, the second one, 4:31, it tried to make a higher high all the way to 1.4496, and then it started retracing. One, two, three. So at this point, it's already been 5 minutes. Now, 5 minutes is very important in terms of news trading. Again, that's why I use 5 minutes bar here. So it tried to make a new high and now it's retraced. What I do is I'll put a support, I put a resistance right at here, 1.449697. And then I just put a pending order to short. So when it goes up, and I don't do anything, right? I just relax and watch. When it goes up to fill me out, I just wait for it to come down. And my stop loss again is 10 pips. So 144.97. My stop loss will be 145.07. As you can see, it never reached my stop loss, and it start coming down to 144.91. And then this is the place where you have to trade organically. You have to trade with your judgment. You cannot use a set rule, right? You want to have a big pictures, but you don't want to be, oh, okay, oh, I need to have one-on-one in order for me to move my stop loss to break even. Again, that works in the longer time frame. In terms of news trading, you really have to react quickly, and you have to react in accordance with what happened in front of your eyes. So this was a live trade for me. I didn't do this one, right? I did this one. So I got filled here, and it start coming down. But as soon as I realized, 6 minutes. Again, 5 minutes. Like I say, news trading is a very important time frame to remember. As soon as you see 5 minutes has passed, and we cannot break lower than 144.90. It's just for me, it's just too risky. All right, it's not good enough. So I just get out. So I got out here, didn't make any money, a couple pips, and then lo and behold, it goes back to stop me out. So that's my first trade. Now, second thing I used to do is is go to the 5 minute chart and I draw a Fibonacci line. So again, I learned this strategy from my mentor, Walter Peters. It's very simple. That's a 5 minute news, 4:30. What we want to do is we want to see a candlestick that close above or below. Again, we don't want to guess which direction that the pair is going because we're not economists. We don't care about the fundamentals. So when it close above this 5 minutes news candle high, that gives us a signal that, okay, it seems that we want to go high. We want to go, the pair wants to go higher. So what I do is I put a pending order at 50% here and a stop loss at 100%. It's a very simple strategy, right? The Fibonacci line is nothing miracle about it. It's just a way to help you understand the ratio. So I put 50 as entry, 100% as stop loss. This is my stop loss range. So what does that tell me in one thing? Is that in order for me to get one-on-one, it will have to come back here, fill me out, and goes back to this at 0%. By the time I have one-on-one, generally I will move my stop loss to break even. And then I will just keep going. When it goes to 61.8, I'll move my stop loss to this line. So I'll just keep trailing up. Now in this case, as you can see, we does break up and we does retrace, but the further we went is 23%. So we did not get filled and the pair take off. Now it's actually a very good sign. That means that it does have a great momentum. So another way you can do, if you want to be more risky, you're more aggressive, you can put a pending order here, another here, another here, right? You can scale in 3 times. And in that way, you make sure you always have a better chance to be in play. Because if you scale in here, and this will be your stop loss, but this will be the moment you set your stop loss to break even, right? If you can see this range is your stop loss, then that will be one-on-one. Now, if you keep going back, see what happened. So you keep taking off, but not too far, right? So you're taking off to here, and it comes back to stop you out at break even, or maybe you already move your new stop loss here. Then it will be a winning trade for you. So again, there's many different ways you can play the news trade, and those are the 2 ways I tend to play. The other more interesting way is just to looking at the ratios. Looking at the price actual ratio is that when you have this kind of news trade, sometimes I use 30 or 50 pips. I just say, okay, the high of this news candle is 144.96. So let me plus 50 pips will be 145 145.46 96. Yeah, 145 50 46 145 46. I say okay, after the 5 minute news candle, if it goes up to another 50 pips, I'm gonna short here. Then you say, okay, what's my stop loss? In this case scenario, your stop loss is depend on your profit target. Again, you always want to have a risk reward ratio concept in your mind. A lot of people come to trading and they're only looking at how much pips they're gonna make. It has nothing to do with that. I don't really care how much pips I'm making, because if I risk 5 pips and I only make 3 pips, that's terrible. Right? Or even if I make 100 pips but I risk 300 pips, that's terrible, because we want to always have a better risk and reward ratio. So if I say 145.46 is my short entry point, and let's just say, okay, I want it comes down to this 100% here, 0% here, to the high of the news candle, 1.4497. Then maybe this whole thing is my profit target. Then maybe I only want to reach half, right? Let's just say half is here. So it's half is here. So let's just say it's around here. Or maybe it's around here. Then you can stop out, or you want to use one-on-one. So I hope you have been able to follow me here. It really depends on what is your target and what your stop loss should be. And that's why I say it's very organic style of trading. It's just you have to react in accordance with what's happening in front of your eyes, but always have few important core concept in mind. First of all is your risk reward ratio, because once you have a better risk reward ratio, you can rest assured knowing that you do not have to be correct every time. So for me, I did not do cable dollar. I did do cable yuan at the today. So 430 it's this one. So I actually wait for it to go another 30 pips and I put a short entry and my profit target is 30 pips. So one on one, right? So when it's right now one, hold on, let me see. This is 16658. So I put 16688 was my first entry. 16688. Yep, I had a short here today, and my stop loss was 30 pips. So 88, 98, 08, 18. My stop loss was 18. Was here, and I also put second order at 08. So I have one lot here and two lot here. And 08, my stop loss was 38. So again, I know it's a bit confusing because it's all same color, but my first entry is here and the stop loss was here. My second entry is here and the stop loss was here. So I got filled here. I almost got stop out, right? But it comes back and I got out at break even because I don't like it. Then I got filled here, and when it comes down to test here again, one, two, three, four. As soon as I see this one, right, this nice kangaroo tail, what does it tell me? Tell me that you know we might keep going up. Especially you can tell that the trend is already uptrend. So I just get out. So this was a winning trade for me today. Now the interesting thing is that from outsiders' point of view, they say, oh, there's how can you make money here, right? That's an interesting thing if you think about it, because when you're looking at this chart, let's say at the end of the day, if I try to show you this in a PowerPoint presentation, most people will think that, oh, you make money you know, maybe at this spot, maybe at here, maybe you short here. But the thing is that it doesn't work that way in real life, right? It all looks very good when you are teaching, right? I see a lot of traders, they don't trade, they just teach. So when you're teaching, you say, oh, you make money in this. The thing is that if you're looking at any chart afterwards, it always looks easy and simple. When you are in a trade, it's always different story because you have a lot of price action, a lot of volatility, and most important, you have your own psychological factor inside the trade. So looking at this chart, funny thing is I did not make money here. I did not make money here. I actually make money at so-called range bound. I make money in this area. And that is what I'm trying to show you is that you can make money in any way you want in trading. You just need to have a few core concepts in order for you to develop your own strategy. For me, that is always a nice or at least a minimum 1 to 1, 1 to 2 risk reward ratio. I always try to protect myself. So I always move my stop loss to break even, and I always get out when things does not go the way I want it to go. And I think that's about it. If you like this video, you or if you have any questions, feel free to leave comment below. I will try to answer, and I will actually try to explain to your questions in maybe another video demonstration. So until next time, traders, have fun trading and play safe, protect yourself. Thank you very much.